Hello, my name is Brady Pelzer, Executive Vice President of Exclusive Annuities. And today we're going to be talking about Athene and maximizing your growth potential in a principally protected platform. Again, exposing yourself, eliminating the market risk exposure on the downside, losing money, no possibility in this contract, and then maximizing the upside growth potential of your asset when conditions are good and positive. Prior to diving into Athene and their Performance Elite series, if you're new to our firm, again, this is Exclusive Annuities. You can visit our website at exclusiveinannuities.com. We're contracted by over 65 of the best insurance carriers in the nation, always ensuring that our clients receive the best proposition available to them based on their needs and desires in retirement. You can see my business partner, the president of our firm, William Rep, as well as myself, Brady Pelzer, Executive Vice President. At any juncture, if you'd like to schedule a free strategy review session with me, feel free again to visit our site, exclusiveinannuities.com. You can click on the book a call with Brady tab and pick a time to have a strategy review session with myself. All consultations are entirely free of charge, entirely free to have a conversation, become more aware of the options that are available to you. Also, visit our YouTube page. This is an example of one of the videos. However, this video is not the only one we have, and Athene is not the only company that we discuss within these videos. You can see here William has a video regarding Midland National. We discuss different carriers, the propositions they offer to clients, why we see or where we see the fit for those propositions, why those propositions fit as the best alternatives to what you're presently doing in the broader market. We also talk about retirement planning conceptually, no product whatsoever, just discussing sequence of returns, income, and distribution in retirement, things of that nature. Also, visit our Facebook page. You can see our reviews here. We come 100% recommended by 33 of our clients. Now diving into Athene and their Performance Elite Accumulation series. First and foremost, nobody sells more indexed annuities than Athene. Last year, 2024, they sold the most annuities, indexed annuities, and also the most indexed annuities any company has ever sold in just the first 9 months of the year. The reason why Athene sales are sky high, simply because of the product that they put forth for their clients. Another reason to look at Athene or consider Athene within your retirement plan, they are A+ rated across the board between S&P, Fitch, and AM Best. No matter the rating agency, they are A+. So any asset that you transfer to Athene, you have the security in knowing that you're placing your funds with a very secure, one of the most financially secure entities in the country. A good piece by CNBC here ranking Athene as the best option for individuals looking for fixed annuities. Now, to dive into the material more thoroughly, go ahead and back out of that. The Performance Elite comes in a 7, a 10, or a 15-year contract. Myself, our firm, we're not so keen on contracts exceeding a decade, exceeding 10 years. So we're not going to look into the 15-year chassis. However, we will dive into the 10 and the 7-year chassis. Is going to go ahead and pull up their rate and product highlight sheets. First and foremost, the 10-year contract you receive a premium bonus. This is different than some annuities you may have come across that offer an income-based bonus, a bonus towards what our firm refers to as the monopoly money bucket, the money that is part of a broader algorithm to compute the lifetime guaranteed income you're eligible for. This would be within the Athene Performance Elite a premium bonus going towards your tangible value. The best bonus, it is state specific, depending on the state in which you reside. There are varying bonuses available to clients. The best bonuses 20% and 14%. There are two iterations of the Performance Elite contract. They have their base iteration and their plus iteration. The biggest difference between the two outside of the bonus is liquidity. However, focusing on the bonus, within the plus contract, you receive 20% of the investment, meaning if you transfer $100,000 into the Athene Performance Elite Plus 10, you would have a day one starting account value of $120,000. We call this the proverbial snowball effect. The bigger the snowball, the greater the asset is later on down the line earning interest. Athene is going to start you out with a 20% bonus. Your 100,000 becomes 120,000 overnight. In the base iteration, the best states receive 14%. Your 100,000 becomes a day one starting value of 114,000 overnight. Now, difference there, the base iteration, there's no fee associated with the contract whatsoever. With the plus iteration, there is a 0.95% annual charge from your account value. What exactly does that fee buy you? Liquidity. If we go down, free withdrawal percentage. This is the base contract on the left. You don't have any access to your funds in the first contract year. And then beginning year 2 through the end of the 10th year, you have 5% annual accessibility to your account value without penalty, meaning the 120,000 example, you get your 20% bonus, or excuse me, 14% bonus on the base iteration. You have 114,000 starting value. Let's assume the asset grows at 5%, a modest figure. After your first contract year, you have $119,700. You would have 5% liquidity within this chassis. You would be eligible to withdraw $5,985, close to $6,000 without penalty. The plus iteration, as well as receiving a greater bonus towards your starting value, you have 10% liquidity beginning the first contract year as soon as you enter the contract and through the 10th contract year. Each year, you have the capability of pulling 10% of your account's value. Again, let's take the 20% example. You place $100,000 into the contract. You receive a 20% premium bonus from Athene. You have a day one starting value of 120,000. Year one, it grows 5%. You're credited 5% interest. You have 126,000, and you have 10% free withdrawal privileges. You're able to pull out $12,600 starting the second contract year. Again, the 120,000 that you start with, placing 100,000 in there. Day one, the first year of the contract, you have 10% accessibility to $12,000 the first year of the contract. Now, we don't just look at the Performance Elite and Athene for the bonus itself. Never buy an annuity or make an investment decision based on a promotional offer such as a premium bonus. As many companies do offer premium bonuses, there are companies that offer greater premium bonuses than 20%. But Athene, what they provide is the best of both worlds, meaning they'll give you the premium bonus and they'll also give you the best indexed crediting options there after the bonus. You receive your 20%, but then what? Athene provides the best opportunity for you for the then what component, the future contract years. We're not just in this contract for one day. This is a 10-year contract. Athene is going to give you the best opportunity to earn interest on a principally protected platform than anywhere else in the world, offering a premium bonus, offering you free money initially. Now, diving into the illustration, what I have run here is value client, male age 60 in my home state of Nebraska. Just to give us an example, 10-year contract, placing $500,000 within the contract. We're scattered equally amongst two different indices with two different terms, 1-year strategies, 2-year strategies. And let's go ahead and pull up the report. Going to zoom in a little bit for us. All right, again, placing 60-year-old male in the state of Nebraska, placing $500,000 into this contract. You'll get a 20% premium bonus, but let's focus on the indexes. Again, we have two different indices, BMP MID 5. That's the symbol. The index name is the BMP Paribas Multi-Asset Diversified 5. We like this index because it is a consistent placeholder within the account. It's been positive 19 of 22 years since it was created. The BOF ANFCC is the NASDAQ FC. We like this index blended with the BMP because as the BMP provides a consistent placeholder, consistent earnings historically, the NASDAQ FC is closely tied to the broader NASDAQ index and can be thought of as our boom potential type index within this account. Here, again, just the BMP and the NASDAQ FC, varying strategy term durations. So although this is a 10-year contract, you have varying crediting strategy terms, 2-year and 1 year. We like to ladder these strategies so you're earning interest each year, but you're also taking advantage of the advanced participation rates on the 2-year terms. You can see here, bottom line item, the NASDAQ FC will garner you a first-year crediting rate of 82% participation. What that means is you're an uncapped participant in this index. If the NASDAQ FC does 10%, you're credited 82% of that 10%, meaning you realize 8.2% of the earnings. Again, if you're watching some of our videos, you'll hear us talk about it consistently. Think of financial instruments traditionally as you are a 100% participant. If you buy stock, you're a 100% participant in that stock. If the stock earns $1, you yourself earn $1 per share. If you lose $1, you yourself lose $1 per share. Within this proposition, you are not a 100% participant. You're either less than 100% participant, such as this 1-year strategy, or you are more than 100% participant. If we look at the 2-year term for the NASDAQ FC, the same index, you're a 130% participant for a 2-year earning period. Meaning if that index did 10% total for the 2 years, you get 130% of those earnings. Multiply that, all earnings multiplied by 1.3, you receive and are credited 13%. If the index does 30% over a 2-year period, again, multiply it by 1.3, you earn and are credited 39% within the account. And so that's why we like to ladder the strategies between the 1 and 2 year terms. Now, if we go down to the guaranteed proposition, again, your $500,000 that you invested in the account receives a premium bonus of $100,000, 20% premium bonus for a day one starting value of $600,000. This is the entirely guaranteed ledger. Assuming 0% interest credit, this would show a significant economic collapse. You've received 0% in this account, while the broader market is more than likely negative. 0 is our hero in indexed annuities on the downside. You cannot lose money as a byproduct of market performance within an indexed annuity. Where you see the accumulated value decreasing in the account is the 0.95% fee. If we look at the end of 10 years, worst case scenario, you're leaving the contract with $545,000 on your original $500,000, when the rest of the market was, in this hypothetical example, on a guarantee basis, the rest of the market was negative. You're walking away with $45,000 more dollars than you entered with, while the rest of the market, your friends, family, are bleeding. Their $500,000 is less than the $500,000 they started in this hypothetical guaranteed example. Now, if we go down to the non-guaranteed hypothetical ledger, again, you have your $500,000. You receive a 20% premium bonus. Equaling a day one account value of $600,000. What this is showing is the performance of this contract the most recent 10 years. So 2014 through 2023, this is what your account would have looked like, assuming present earning interest participation rates, as well as the same repeated behavior. If 2014 through 2023 repeated its pattern, at the end of 10 years, your $500,000 would more than double and turn into $1.187 million based on past performance of the indexes. Now, again, the risk reward proposition, your principal is entirely protected outside of the 0.95% fee in which you're paying. And based on the indices, we have consistent earnings, thanks in large part to the BNP Paribas index that they provide. And then we have some boom years, thanks to the NASDAQ FC index. 2 years ago, it was the top. In 2023, it was the top performing index in the entire marketplace, indexed annuity marketplace. The NASDAQ FC that year, 2023, earned 17.37%. Oftentimes in indexed annuities, you're told 4 to 6% is the target. That's mostly true with the majority of the contracts available to you. However, this is one of the rare contracts that 20% earnings over a given period is not out of the realm of possibility. Now, this is the Performance Elite Plus 10. Again, the Plus 10 proposal. Now, what does that look like in the no fee, less liquidity model, the Athene Performance Elite base iteration? Let's put our same $500,000 in. Now, remember on the plus iteration, we had an end value of 1.187 million. Now, same index allocation, same participation rates, 82%, 130% on the NASDAQ FC 1 and 2 year strategies. Your 500,000 in the state of Nebraska receives a 14% bonus. 500,000, you receive a 14% $70,000 bonus. Now you'll see on this guaranteed ledger, again, assuming 0% earnings, negative market, your 570,000 remains entirely intact. Because on the base iteration, you're sacrificing liquidity. You're not able to pull out as much within the contract without penalty, but you're not paying a 0.95% annual fee. End of 10 years, worst case scenario, you're walking away with your 570 fully intact while the rest of the market or your peers are bleeding. Now, the same non-guaranteed hypothetical, most recent 10-year performance, what would that have looked like for you? End of 10 years, you have $1.231 million. Almost more, or excuse me, 50,000, roughly $50,000 more than what you would have had in the plus iteration, paying the fee. That's why it is all determinant upon liquidity. If you have further liquidity needs or are more comfortable with the 10% accessibility, then the 5% liquidity is very important to you. The plus iteration is going to be the best idea to proceed forward with. If liquidity is not a concern, you have ample assets outside of this contract specifically, the base iteration is going to be the best option available to you because you will see that paying the fee over time, if you're not taking withdrawals out of the contract or need the excess liquidity, you're going to end up with more money at the end of the term, at the end of 10 years. And if we go down just a little bit more, let's look at the most recent, that same ledger we just looked at on the left-hand side, 8.01% is the average annualized return for you to end up with 1.2 million after 10 years. The highest index scenario, what this is doing is out of the last 20 years, Athene is taking the best performing continuous 10-year period out of the last 20. And what that provided was an 11.84% average return to clients. Now, the right-hand side, this would be worst case scenario. You can think of this as worst case scenario if market patterns continue to perform consistently. The worst continuous 10-year period would have returned 5.75% on average. Most recent, you're ending up with 1.2 million. The highest, best case scenario, 1.7 million. And the lowest, worst case scenario, 997,000. Still almost doubling your money after 10 years. Now, that is the 10-year chassis for the Performance Elite. Let's take a look at the 7-year chassis and the differences between the two. First and foremost, within this contract, the 7-year Performance Elite, liquidity is not a concern because the base and the plus iteration, you have 10% free withdrawal privileges in the contract. Doesn't matter if you're in the base or the plus for the 7-year chassis. You have 10% accessibility of your contract's value each of the 7 years. The only thing that the plus iteration provides you for the 7-year chassis is a premium bonus. But very much the same scenario that we just ran through on the 10-year chassis, you're better off on the 7-year chassis just going with the base iteration in all circumstances than getting a bonus and paying the fee. In all circumstances, you're better off with the base iteration. And so that's what we'll look at comparatively. Again, your 500,000. We have the same index outlay as shown on the 10-year chassis. You'll see more advantageous crediting rates. In this example, the NASDAQ FC, rather than an 82% participation, you receive an initial participation rate of 115%. Meaning, if the NASDAQ FC did 10% for a year, you would earn 1.15 times earnings and be credited 11.5% for the year. Now, if we take the 2023 example of the NASDAQ FC when it did 17.37%, and we multiply that by 1.15, in 2023 within the Athene Performance Elite 7, you would have earned almost 20% earnings. Guaranteed, your 500,000, no bonus on the 7-year. 500,000 remains 500,000 throughout the contract duration. You walk away with 500,000 at the end of 7 years. The non-guaranteed ledger, your same 500,000 now becomes 1.05 million after 7 years. In 7 years, you're doubling your money. If we look at it comparatively to the 10-year chassis, you have 1.3 million, almost $150,000 more than what the 10-year hypothetical provided. And that goes to say, bonuses within annuity contracts should not be the only reason you're purchasing an annuity contract. It is vital to look at the underlying components, the ongoing continuous benefits available to you within that contract, the continuous ongoing earnings potential in that contract, because the 7-year iteration will show you that you earn more over time than you do taking the bonus up front and sacrificing the participation crediting rates available to you. The same most recent on the left-hand side is over 10% as opposed to 8% on the 10-year chassis. The highest, 15% as opposed to 11% on the 10-year chassis. and the lowest 7.75% as opposed to 5%, 5.5% on the 10-year chassis. Now, the illustrations, these are hypothetical. And so let's look at how these indexes have performed historically, tangibly. The NASDAQ FC, if we look at the most recent 10 years, it has averaged 6.82%. With the 7-year chassis as an example, 6.82 times 1.15 to factor in a 115% participation rate, we have a 7.85% average, annualized average over the last 10 years. If we look at the BNP, and again on the 7-year chassis, your 1-year crediting rate is 195%. Most recent 10 years. Again, it's the consistency that we're looking at with the BNP, but then also the advantageous crediting. Again, over a 1-year period, you're getting almost 2 times earnings on the index. Oops. So if we take 2.6%, multiply it by 1.95, over the last 10 years, the BNP Paribas Index, Multi-Asset Diversified 5, is garnering a 5% average return for clients with no downside exposure. Again, Athene provides further growth potential, in my opinion, than any other carrier available in the indexed annuity marketplace. If we look at the 7-year example, it just depends on what those indices do ongoing. However, if we get further boom years within the NASDAQ FC, 30% earning potential is a real possibility within this contract with 0% downside exposure. I hope you find this video incredibly helpful as you navigate your retirement journey. Feel free to visit our website, Exclusive Annuities, book a free strategy review session with me at your earliest convenience, and I do look forward to getting connected soon.